Let's take a look at the markets now, and according to the latest USDA crop progress report, corn rated at 66% good to excellent, with silking at 61%. Soybeans rated 71% good to excellent, with blooming at 75%. All the makings for what looks like to be a very strong crop. I was joined by Tredas' Doug Simon late on Wednesday, and we started our conversation by taking a deeper look into those crop condition numbers.
Crop conditions on Monday, they were at 69% both for corn and beans nationally. They were unchanged for the week. And with the hot weather we had last Saturday, 100 degrees, that thought that maybe those crop conditions on the corn might go down a little bit. They actually went up in Illinois and a couple of states. Nebraska side of it, 66, good to excellent, for corn. So we're in pretty good shape, and 71, percent on the beans. You've got some areas in Nebraska, you kind of go from Lincoln kind of north to Valentine. We've had some pretty good rains, but you go up by Fremont and Omaha, they're maybe 50% of their normal rainfall since January. And you go out in the southwest part of Nebraska, really dry. A lot of that corn's probably not going to do very well on the dry land side of it. So the heat, and dryness is taking a toll in some areas. We've had some nice rains here the last several days in Lincoln, which has been pretty helpful around, kind of eastern Nebraska for dry land side of it. But when you go up to northeast Nebraska on this eastern side by the Missouri River, that's a dry land, irrigated corn, but there's a lot of dry land corn too. And don't think we'll have to see the yields that we've seen the last couple of years up there.
We have been seeing a pretty hot July thus far. And yeah, that term weather market is being thrown around a lot. What are some marketing opportunities that we can take advantage of right now?
Well, the corn market has fallen off here, in the last several days. On Monday, Tuesday, it popped back up on Wednesday a little bit. Where we had gone back up toward 360 on the Ds, and now we're back down toward 335 on the Ds. When you look at the USDA's acres and the yields and the carryover, they're projecting this to be, call it 2.8 billion, give or take. That's still 800 million bushels than we had around, projected last year. So they're projections for corn to be in that $2.90 to $3 range. So we're still probably got about 35, 40, 45 cents of risk premium in the corn market yet, if we kind of go through and have, fairly normal August. So you can buy some puts against October, and spend, maybe 8 cents on the 330 October put. If you want to hedge it, maybe buy a call. I think you probably need some flexibility in here. The funds are still short, about 135,000 contracts. So they're still a little negative. They were long about 100,000 of beans. They kind of got back to long about 65,000 bushels of beans. But with the way the prices are so low, people don't really like selling in here. You can use some options to give you a little bit of flexibility here.
Are you more optimistic with corn or with soybeans over this next little bit?
I would be more optimistic for soybeans by a long way, just because of the fact that our world carryout on the soybean side, it's actually tightened up to about 30%. When you look at the stocks to use ratios on a global standpoint, they're up toward 37%, 2 years ago. So we've actually projected to drop below levels of carryout to stocks use ratios on the global situation on beans back to the 2014, 2015 period. So, and you also look at soybeans from the perspective of if you have a U.S., if we would harvest 80 million acres, say, and you take 2 bushels out of yield, say we were hot and dry in August, which there's more of a chance that weather's going to impact the beans. You could drop your carryover on the beans from maybe a 400 million bushel carryover and drop it back toward 250. So the bean balance sheet's got a chance to have some damage done to it, where you could see some positivity in prices. And those world numbers are tight. If you look at soybean oil stocks, they're very tight. Malaysian palm oil stocks are off 20% from last year. They're about 10% stocks to use ratios. But all in all, that soybean balance sheet's just a lot tighter than the corn. There's no way to put a positive spin on the corn balance sheet. I mean, when you look at a 2.8 to even if you took 10 bushels out of national yield, maybe you can get us back to a 2 billion bushel carryover. Then you could see prices maybe back toward 360 to 380 again. But that requires us to drop 10 bushels out of yield right now, which at this point in the year, it's really tough to do.
Let's talk about exports now for a minute. And a recent corn purchase from China, largest ever made from the U.S. on the corn side, and the third largest in history on any given day. And of course, China is still trying to do what they can to fulfill that phase one trade deal. What do you make of all this?
Well, we had a 1.3 million metric ton sale, 2 weeks ago, followed up with a 1.7. That's about 5 million metric tons. There's about 40 million metric tons per metric ton. So 3 times 40, about 120 million bushels. So when our carryout's going to be 3 billion, I mean, we need to export a lot more. We're still lagging on our total commitments this year versus what our goal is on the corn side of it. But that's a nice start. But overall, China is lagging, maybe 50% of their phase one goal. So, I mean, yeah, that's positive, but they're still way behind. Now, this morning on Wednesday, we had about a million metric tons of beans announced. Just a little bit of that was the 2019-20 crop. The bulk of it's 2021. So that's good to see that they're coming in here buying beans. But when you think back in the old days, we used to, export maybe 32 million metric tons of beans to China, and we're maybe around 16 million metric tons on the books for this year, according to USDA, Foreign Ag Service number. So we're lagging there pretty seriously, but it's good to see those sales recently. But then you've got, issues in China. We want to get together on trade and cooperate, but there's a lot of geopolitical things that we're battling with China that continue to put a bad taste in their mouth and probably a bad taste in the mouth of the farmers as well.
And over in Argentina, their corn harvest is moving along at a pretty quick pace due to some dry weather. Are we looking at more competition for our corn exports sooner than normal, you think?
This time of the year, the safrinha crop that comes out of Brazil, their second crop, they're finishing up harvest on that, and they've had a respectable yield. That's usually a big swing factor in the world markets. They raise that after their wet season ends, and so it's a drier season crop and can get hurt by late season drought. And it's turned out well this year. So they're going to be competing with us on the export side of it. There's still a lot of beans on boats going to China that are really aggressive, moving, beans out of there, which have, cut into our export share. But their crops in Brazil over the last year and Argentina have both been very good over there.